A tax credit worth up to $7,500 for buyers or lessees of electric vehicles was a key part of Democrats' Inflation Reduction Act of 2022. In 2025, a Republican-run Washington is widely expected to get rid of this credit. This is why the EV tax credit's days look numbered and what it means for the stocks of some automakers. There has been an expectation for months that Republicans will get rid of the EV tax credit if they have control of both chambers of Congress and the White House. And in 2025, that's exactly what they'll have. Even with that expectation, stocks of some companies that make EVs fell sharply on November 14th in the wake of a report that President-elect Donald Trump's administration was going to kill the EV tax credit as part of a big upcoming Republican tax package. Rivian stock was especially hard hit as it closed down by 14% on November 14th. That was the stock's biggest drop in 9 months. Tesla fell by 6% and Lucid lost 5%. The stocks of the big US car makers that make some EVs but also conventional cars, that would be Ford and GM, were just down fractionally that session. Overall, traders seemed to be expressing the view during this session that getting rid of the tax credit would be really bad for business for EV companies. But Tesla's CEO Elon Musk said in July that getting rid of the tax credit would be devastating for competitors, but would only slightly hurt Tesla. He told reporters in December that he thinks all credit should go away. So it's not sounding at all like the Trump-Musk relationship is going to prevent the EV tax credit from going away. Now let's talk about the different reasons why the EV tax credit looks like it's toast. For starters, there's a real partisan divide toward EVs. As we can see in this chart, Gallup found that 71% of Republican voters said they would not buy an EV, and for Democrats, 17% felt that way. With independents, it was 38% that had that opinion. In talking about why the EV tax credit would be targeted, Republican Senator Tom Tillis of North Carolina said,
"You're giving incentive to an industry, fair enough, but you're giving it to a base of people who are generally people of means right now."
This chart from Experian shows the income level of EV buyers over a rolling 12-month period. As you can see in the chart, there's buyers at every income level, but the group with the biggest number of buyers is those making more than $250,000 a year. And it's important to note that buyers of EVs are subject to income limits if they want the $7,500 tax credit. For example, it's $300,000 for couples, $150,000 a year for individuals. But there's a loophole if you lease EVs. As a Consumer Reports analyst put it, conditions on income levels, battery sourcing, and vehicle price all get thrown out the window if you lease your EV. So, as you might expect, leasing has become a really popular way to get an EV, and that's shown in this chart. As you can see, the way people are getting their EV is really changing. In 2019, roughly 20% were leasing, and now in 2024, that increased to 45%. But the federal tax credits for buyers and lessees are all expected to go away. The Republican 2017 tax cuts will expire at the end of 2025 unless Congress extends them in a big tax package. At that point, as part of that tax package, Congress is expected to go after the EV tax credit. And when exactly might President-elect Donald Trump and congressional Republicans end the $7,500 EV tax credit? One analyst estimate says January 1st, 2026. So EV companies and EV buyers still have some time.